Hi, I'm Bob Grisanti, your cameraman. You're watching Taking Stock.
Stand by.
Also, we're seeing some stocks with good earnings.
2 minutes to go here into the closing bell on the trading floor of the New York Stock Exchange on this Thursday, August 6th. The Einstein of Wall Street, the great Peter Tuchman himself, joins me now to kick off the broadcast today. Peter, we're looking up at the big board. We were in positive territory. The problem for the bulls, it didn't last very long. What happened in the
The
afternoon?
Bulls got tired once again. It's happened 2 days in a row. Imagine, look, the bottom line is we've been on a run for a number of days for legitimate reasons. Obviously, we're disengaging the war in Iran for a while, and the price of oil has gone down. That's a big inflationary component to what's going on here. But today there was a couple of negative things that came on about the fact that the Iran deal is not as close to fruition as the president had wanted. And that's, everybody's watching, we're headline based right now. And so I think that's where a lot of the fade came from. 2 days in a row, the buyers came in, they wanted to get the momentum going, and it sort of faded. So I think, look, it's legit, we're trading at record highs. And eventually you're going to hit up against resistance, technically and legitimately. You're seeing stocks come out with really good earnings and guidance, and they're going down. Yeah. And that goes back to Palantir back in November of last year, where it went up 7 days in a row before the earnings, and they sold it off 9% on the earnings, on great, pivotal, spectacular earnings. That's what Wall Street does. Buy the rumors, sell the news is a legitimate thing. It doesn't mean that the game is over or AI is a bubble. It just means that you're taking a profit.
Sure.
Why wouldn't you take a profit?
One of our favorite adages. Thank you for being here to kick things off. Time now for the closing bell. More Taking Stock after this. There you have it, your final tail of the tape on this Thursday, August 6th. The S&P 500 finishing in negative territory, down, let's call it 0.2%. The Dow 30 components not having a great day, but is coming off several record-setting closes here on Wall Street. The Dow finishing down about 0.9. The New York Stock Exchange Composite Index, which is also not very far removed from its series of all-time highs, down for the tape today, 0.12%. The small caps down 0.6%. The crypto majors down fractionally. Oil benchmarks, West Texas and Brent moving up, but not a huge dramatic move. Catching a bid elsewhere on the tape, oil and energy stocks plus quantum stocks actually having a pretty good day. We have a lot of sectors that are under significant pressure today. The major airlines, the big banks, the home builders after yesterday's pop, they are down in the red today, and software stocks on the losing side of the trade. Datadog in particular shares down 19%. Disney, Microsoft, Chevron, the best names in the Dow. Your Dow laggards, Salesforce, Boeing, as well as Honeywell. The Mag 7 tech stocks kind of in mixed territory today. Microsoft, the outperformer. Alphabet, the biggest loser there. SpaceX shares up about 3%. This coming as the first batch of shares unlocked since its highly expected IPO earlier this summer. Let's bring in Tejas Desai. He is VP, Director of Thematic Research for Global X ETFs. We are big fans of your work over at Global X. Grateful for you being here today, my man.
Thank you, JD, for having us.
Okay, so earnings season, earnings palooza continues to chug along. What have we learned so far about where the AI trade is now and what the next phase of the AI trade may be?
Well, JD, this has been a phenomenal earnings season across the board, not just for the technology industry, but you're starting to see AI really drive the S&P 500 and the broader economy. I think two specific trends stand out to us. One is you have this capital cycle that continues to accelerate going forward. The hyperscalers reaffirmed their capex guidance throughout this year. That is good news for semiconductors. That is good news for a range of the bottlenecks across that stack. Electrification, the physical infrastructure stack. But then the second part of the story, and an increasingly important part of the story in our view, is monetization. We're starting to see more monetization evidence emerge as well. And so investors should pay attention to the interplay between both of those ideas. But that's where we are with overall earnings right now.
How are you thinking about mega CapEx spend? Because Google made a bunch of headlines for that negative print for the first time in company history. How do you think investors are thinking about it, or how should they think about it as we continue to see these mega cap stocks tell us they are spending a ton of money on capital expenditures.
Well, we like the receivers of that cash, right? When you think about the scale of the spending, almost $750 billion will be spent between the top 4 hyperscalers, top 4 to 5 hyperscalers, if you will. And that money is, channeling through the semiconductor supply chain. AI semiconductors clearly stand out. When you think about how the semiconductor industry has historically supplied, you're looking at structural re-rating of demand, and there's really not enough capacity to meet that demand. That's one part of the story. But look, you've got to go broad and deeper into the economy, right? Think about the physical costs of actually building these data centers. That's a lot of steel, that's a lot of concrete. The infrastructure developers, the physical economy players benefit from that. And then finally you have power, which is a highly investable idea. Almost 20% of US electricity could go to data centers by 2035. That is the equivalent of all of the electricity consumption of industry and manufacturing in the United States. And so you're really creating this sector out of thin air in terms of power demand. And we think that whole bottleneck dynamic there is extremely investable.
Where else do you think investors are overlooking opportunities in the market that maybe they would benefit from paying a little closer attention to?
One opportunity that jumps out to us is cybersecurity. Earlier this year, as part of the software sell-off, we did see cyber stocks come under a little bit of pressure. The market was clearly wrong because you've seen a violent up rally within that whole space. And so we see an exponential growth in cyber needs across the board. The total addressable market there could likely be upwards of $1 trillion. But the other area that we find very interesting is the data center complex outside of the hyperscalers. I'm talking about companies like Equinix, Digital Realty, the smaller companies that allow the average S&P 500 enterprise to really leverage AI and benefit from AI. And those companies, when you think about the industry there, it is operating at historic low vacancy rates. That's translating into pricing power for these companies and is really boosting their earnings. And we like that story a lot.
Before I let you go, one general investment theme that you believe in for the roadmap of the next 12 months you think our viewers at home would benefit from keeping in mind as well?
Well, a lot of clients generally are also starting to see AI fatigue and may want to reduce their technology exposure. For those investors, we think that the defense technology landscape is very strong and an incredible opportunity. When you think about defense technology as a whole, you're clearly in the middle of a global rearmament cycle. Militaries around the world are spending capital. We believe that between now and the end of the decade, you could see as much as $1 trillion of incremental spending coming through on an annual basis, and a growing percentage of that is going towards technology-first solutions, right? Drones, AI, cybersecurity, autonomous weapons, and we see that plenty of opportunity on the defense technology side.
Tejas Desai making his Taking Stock debut. Will not be the last time you crushed him, my man. Come back on the show anytime.
Thanks for having us.
Nice to see you. Skylar, grab your mic. Howard, we're going to head this way. Here are the few of the top analyst calls that moved the tape this morning here on Wall Street. First up, pardon me, Evercore ISI reiterating DoorDash with an outperform rating, keeping its price target locked at $300 a share on strong demand from subscribers. Shares down about 8% year to date. Next up, JP Morgan Chase upgrading drug researcher Charles River to an overweight rating, hiking the price target from 180 to 310. Thank you, gentlemen. Shares up almost 30% year to date. And finally, Piper Sandler given a downgrade to AppLovin. Sorry, fans of AppLovin. Now a neutral rating, slashing the price target to $385 for the software stock. AppLovin down 19% after reporting quarterly results. Here's a stock, though, Howard, that is not down 19%. How about Motorola Solutions, up more than 8%, one of the best names in the S&P 500 today. This name, maybe you haven't heard of it for a while, but you certainly remember it as a longtime smartphone maker. It's not really what Motorola does any longer. It now makes public safety gear, think of things, like police radios and security tech. The company reporting a significant beat on earnings as well as revenue, also boosting its full year guidance, up 8% on the day, up about 25% here in 2026. FinTech TV's very own lead anchor, Remy Blair, sat down with Blockchain Foundation's Cleve Messidor. They discussed the latest news surrounding the Clarity Act in Washington and a whole lot more. Take a look.
Joining me this morning to weigh in is Cleve Messidor, Executive Director of the Blockchain Foundation. Cleve, good morning. Great to have you here. Thank you so much for joining me. So there are a lot of headlines that are coming through right now, but when it comes to Clarity, where is the progress right now? And is the glass half full or empty?
Well, the good news is both Democrats and Republicans in Congress want to get this bill done. There is consensus that clarity is needed. The challenge is compromise, compromise, compromise. I'm optimistic. I'm encouraged that the White House is open to a conversation around language, around ethics. They weren't before, so that's good news. Congratulations to Senators Moreno and Loomis for negotiating that. But Congress has authority over legislation. They will determine what the language on ethics is. And it doesn't sound like the language that Democrats want is the same language that the White House is pushing. So ultimately, Congress will make a decision, but I think we can still get this over the line. You know, the most important thing for right now is bipartisanship and compromise. How can the crypto industry start really figuring out who's who, who's where? The sad reality is it's not just Democrats that we have to bring to our side. The issues around illicit finance and developer protections are a big issue for Republicans. And even this issue around yield has not been solved, even though we have a compromise. So, what is the road to 60 votes? It's a challenging vote. It's a challenging road because you need votes on both sides, and we need to start counting those votes, and we need to see who's who and who's where.
Yeah, absolutely, Clev. You highlighted the key points of contention, and compromise, depending on who you ask, is a very challenging word. But as we head into month end, we are fast approaching that recess in August. So we do have a timeline as well as schedule to keep. And after that, all eyes will continue to be on the nation's capital, but we're counting down to the midterm elections. So when you look at the calendar, why is this so important?
Well, before the August recess is important. But this is not a popularity contest. This is a legislative process, and there are steps involved. The calendar has not run out in Congress yet. So can we actually make that? I think it's August 4th before the Senate goes out and get a Senate vote. I'm not sure. But this Congress doesn't end till the end of this year. And Senator Toon, Senator Tim Scott, the House has already voted. We can still get this done. I'm hesitant to put arbitrary, you know, clamps on us like, oh my God, we have to do it by August research. We have a lot of work to do. We have a lot of work to do with Republicans and Democrats. These issues around yield, around developer protections, illicit finance, ethics, they're big issues. This is a landmark legislation. We need this legislation. And the good news is, as Senator Mark Warner pointed out last week, we need to get this done, right? But we have to make sure we work through these issues. And as the industry has to start counting our votes, lining up our champions, we can't lose somebody because they say, "Oh, I'm good on ethics, but I'm not good on the issues around illicit finance."
Yeah.
We have a lot of work to do. I'm not concerned about this August deadline. I am concerned about getting it done this Congress before midterms, preferably. But this Congress is what we need.
Well, Clev, always great having you on the show. Thank you so much for joining us here today, and thank you so much for sharing your insights.
Welcome back to the show. You are watching this Thursday edition of Taking Stock live from the trading floor of the New York Stock Exchange. And our next guest joins us now, Yossi Teradi, co-founder and CEO of A Security. Yossi, nice to see you here today. Let's talk all about AI and the ways it is changing cybersecurity. You said weaponized AI is really changing the current landscape. Why is this different from past shifts that we have seen in some of these underlying technologies?
Thank you. Thank you so much for having me, JD. And the risk of weaponized AI is something that is not just another incremental change in technology. It's something that is fundamentally different than how we address cybersecurity risk. The reason is that nation state capabilities are now available to everyone with an access to frontier models. And it means that they can run at speed, scale, and sophistication of the most advanced attackers. And this is something that we are not ready for it from the perspective of what we built so far. Up until today, we built all our defenses against a human adversary. And now we're facing advanced machine-based, especially at the speed of machine. And this has put a lot of our enterprises' controls at risk. We're not ready for it. And as we see here right now at Black Hat, at one of the biggest conferences in cybersecurity, security leaders are concerned of the risk of weaponized AI, but still all our controls are ready for a human adversary. So this is something that all enterprises needs to be aware of it.
Yossi, why do you believe the industry needs to completely rethink the way that it defends actively against the threat posed from cyber attacks?
Because the pace that we build our defenses today are meant to address a tier of attackers that don't have nation-state level attack capabilities. They're using different tools, they're using different capabilities at their hands today. But once they will leverage the most advanced capabilities that AI can provide them, similar to Mythos, for example, this will put all of our enterprise controls at risk. We have a vulnerability that we need to pay, and this will be captured by attackers. It means that most of our enterprises controls and software were not built to absorb attackers using AI. So it means that we have a huge gap that we cannot do just faster what we did so far. We need to change the way that we address security. We need to leverage AI to find vulnerabilities in a safe way and fix that before attackers are exploiting them.
Yossi, what is one reality of the cybersecurity landscape that you think we are not talking enough about?
I think that right now, a lot of security leaders are waiting for Mythos to be available for attackers. They're preparing for that. But I think we don't need for these capabilities to be released for security teams. We can immediately today use the current frontier models to prepare ourselves against Mythos capabilities at the hand of threat actors. And I think we already proved that with our tool at Ace Security, that we can find enough vulnerabilities to cover and to be ready for Mythos threat right now. And we don't need to wait. I think it's currently a board level question. Are we ready against Mythos capabilities? Are we ready against weaponized AI? And I think we don't need to wait for these capabilities to be released. We can answer that today with the frontier models that exist today and be ready for that right now with what we're building.
I think I have about a minute left. What should every CEO know about the rise of artificial intelligence-driven cyber attacks?
I think that the first thing that we should know is frontier AI right now provide the most advanced capability that exists nation-state level to every attacker. So ransomware, impact of data leakage, impact of availability can now be impacted by any threat actors. And the only way for us to address that risk is if we are using the same capabilities to find vulnerabilities in our environment. CEOs should ask security leaders, how are we doing things differently? Now, how are we doing the same thing just faster? And this is something that in the upcoming months, we will see a surge in breaches, in impact of data leakage and impact of availability. And if we'll not change the paradigm of how we're attacking, how we protecting against those attacks, we'll basically be at the position that attackers will have the upper hand.
Yossi Teradi is the co-founder and CEO of Ace Security. Yossi, grateful for your time. Please come back again soon. And folks watching at home, don't go away. A lot more coming up on this jam-packed edition of Taking Stock live from the big board. Stay tuned. Hey now, welcome back to the show. Joining us now is Danny Jenkins. Danny is the CEO and co-founder of ThreatLocker. Danny, nice to have you join the broadcast today. So, let's talk about your big raise, $190 million. What does this funding allow you to do next?
Well, what it really does is allows us to focus on the mission of stopping cyber threats, whether they're coming from AI or whether they're coming from humans. Cyber attacks are increasing, vulnerabilities are increasing, and our goal is to protect as many companies as possible as fast as we can.
Danny, first of all, what event are you at right now? It looks really cool where you are.
Yeah, I'm at Black Hat here in Las Vegas. It's very loud, so hopefully the sound's coming through okay. It's been a great few days. We're talking to a lot of cybersecurity leaders about the problems they're having, the challenges they're having, and how Zero Trust is really being focused drive point to protect against the new AI threats.
My man, it sounds great. You're coming through loud and clear. I'm just saying, it also looks very cool where you are. Let's get back after it. Zero Trust. You know what this means very well. I don't know that a lot of our viewers do, but it is a very splashy buzzword in the world of cybersecurity. What does it mean simply?
Very, very simply, what it means is rather than giving access by default, we give access by exception. Whether that's to a program, a game, an AI agent, we say your access is constrained unless we tell you can have it. It's really a smart way of thinking about cybersecurity. It's impossible to try and detect everything that's bad. We've heard over and over again of detection tools failing. When you use Zero Trust, you're not relying on something being detected. You're saying, is this required for our business? If it's not, it's irrelevant whether it's good, it's bad, it's an attack or not.
What is the biggest cybersecurity mistake that you still see far too many companies make?
I think the biggest mistake is actually really the simple things, like just trying to rely on, I'm going to leave things open and I think we can defend by simply patching everything, which of course we should be doing. Companies just need to focus on really basic controls, taking away software rights, taking away SaaS rights, and just making sure they can be done really easily. I think the biggest mistake is just not relying on basic controls.
Danny, the so-called bad guys have access to all the same tools as the so-called good guys. How do you ensure that the good guys use it better than the threat actors?
Well, and I think, look, the good guys are always at a disadvantage because we have to be right 100% of the time. We don't get the opportunity to say we stopped 99% of ransomware, and the company says, well, we still got ransomware because 1% isn't good enough. So because we have access to the same AI tools, we have access to the same defense tools. The problem is they're looking to create ways to evade detection. We're looking to find more innovative ways to detect them faster. The way we avoid problems is just by stopping relying on the idea of detection and simply saying, I'm going to basically shut the door. I'm going to allow what I need. We're going to allow the business to run and do exactly what it needs and don't try and play their game of cat and mouse. Just play, let's lock the door. We'll open it when we need it open and for what we need it open.
Danny, as we take a look ahead, what are some of the trends in the underlying technologies that are at the heart of my conversation with you today that most excite you to invest in over the next decade?
What most excites me to invest in? I think it's really about, cybersecurity is an amazing opportunity right now. I think investing in technologies that are making tangible change, controlling software, just general technology that's going to actually enhance delivery beyond just AI. But I think AI is creating a lot of opportunity, and cybersecurity is the place to be.
I got about 30 seconds left, my friend, before we let you go. What is one reality of the cybersecurity ecosystem that you wish more people better understood?
Malware is just software. Whether it's AI created or not, it's just software. If everyone understood that, they'd be able to handle it and treat it as software and control it as such. If everyone can understand that, I think we'll be in a better situation.
Danny Jenkins, CEO, co-founder of ThreatLocker, join us live from the great city of Las Vegas, Nevada. Danny, take good care. We'll talk to you again soon.
Thank you. We'll talk to you.
You got it, my man. All right, folks, don't go away. A lot more Taking Stock coming up on this Thursday afternoon, live from the big board. Stay tuned. Welcome back to the show. The biggest tech companies in the world, many of them are generating record revenue, but they don't all exactly make money the same way. From cloud computing and digital ads to subscriptions and, of course, artificial intelligence, here's a look at the business models driving the world of big tech.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money, where timing matters as much as totals. Today we're going to be talking about Truvada, built around a question CFOs ask more often than they admit. Where is the cash right now? Truvada connects directly to banks to provide real-time visibility into balances, cash flows, and forecasts. So how does Truvada actually make that money? First, SaaS for cash visibility. Companies pay to replace delayed bank files and manual reports with live balance data pulled directly from the banks. Second, forecasting leverage. Knowing today's cash is very useful. Knowing where liquidity will be next week or next month changes financing and investment decisions at scale. Third, workflow dependency. Once daily cash positioning is automated, reverting to spreadsheets, that becomes a liability. So why does this matter right now? When capital tightens, visibility stops being a nice to have and becomes survival infrastructure. Truvada, it monetizes that foresight. And that is how Truvada actually makes money, by helping companies see liquidity issues before they turn into crises. Have a company you want featured? Drop it in the comments and it might just make the cut. In the meantime, back over to you.
Welcome back to the show. Before we wrap up, get you quickly caught up on what to expect tomorrow here on Wall Street. It's kind of a busy Friday. In the morning, the latest quarterly results from Wendy's. We all love Wendy's. Take-Two Interactive and retail favorite Under Armour. But we also get the July jobs report. Those figures cross the wire at 8:30 a.m., 1 full hour before market open. Final tail of the tape, the S&P down 0.2, the Dow down 0.9, the small caps down 0.6. Thanks for watching this Thursday edition of Taking Stock. Enjoy your Thursday night. We'll see you again tomorrow.